We're looking at sources that propose something pretty radical.
Exactly. We're tackling that constant battle you see everywhere in the corporate world, right? The fight between hitting those immediate financial targets.
And actually building something that lasts, something sustainable, resilient.
Right. And our sources today, they're excerpts from BNB Frog, specifically about their operating mandate, which they call the eternal perspective.
It's a unique one. And it frames their whole approach around achieving freedom. Freedom from that obsession with short-term results that shapes, well, almost everything else.
So our mission here is to figure out how exactly a company claims it can just opt out of conventional business pressures. How does adopting this specific long-term faith-driven view actually unlock operational freedom? What did that look like on the ground?
And it's not just theory. You talk about specific freedoms, measurable things. It's got potential implications way beyond just crypto.
Yeah.
It touches on structural resilience for any business.
Before we get too deep, though, give us that immediate aha moment from the source material. What's the most, maybe surprising thing right off the bat?
Well, it's their justification for how they move beyond the usual constraints. It's unlike any corporate structure you've likely heard of.
Okay.
They explicitly state their chairman of the board is God, and the chief executive officer, Jesus Christ.
Wow. Okay. That's certainly a statement, a very unique take on corporate governance.
It is. And crucially, they present this not just as like a mission statement on the wall, but as the operational rationale.
The actual mandate that lets them do things differently.
Exactly. It's positioned as the foundation that allows them, or maybe compels them, to prioritize purpose and resilience over what the market usually screams for, which is, rapid financial results.
So that divine alignment, that's their ultimate freedom clause, essentially.
It fundamentally shifts the whole accountability question, doesn't it? Normally we ask, who are the shareholders? What do they expect this quarter?
Right.
For BNB Frog, according to these documents, the question becomes something like, how does this mandate, this eternal view, translate into actual standards for our software, for security, for long-term stability?
So governance shifts from just maximizing profit
To ensuring enduring quality, excellence that lasts. It's a totally different framework.
Okay, let's really unpack this then. Before we look at how this eternal perspective works as their proposed solution, we need to get crystal clear on the problem they're reacting against.
Right, the challenge. They call it the tyranny of short-termism.
And they paint it as this structural disease, something deeply embedded.
Oh, absolutely. Across the board. Tech, finance, healthcare, manufacturing, you name it. The issue isn't profit itself, obviously.
Wow.
It's the overwhelming pressure to prioritize immediate financial wins, often just tactical stuff, over the strategic long-term health of the company.
Yeah, over things like sustainable growth, real innovation, integrity, the foundations.
And the sources pinpoint the main control mechanism, the tyranny of quarterly earnings reports, that relentless 90-day cycle.
Explain that a bit more. How does that cycle exert so much control?
Well, when your main audience is the stock market, and that market demands performance updates every 3 months, it forces executives,
Right.
really forces them,
Yeah.
to make decisions that look good now.
Right. Decisions that boost shareholder value in that immediate window.
Exactly. Even if those same decisions, plant the seeds for problems down the road, compromising quality control, maybe skipping crucial testing, delaying important infrastructure upgrades.
Because those things cost money now and the payoff is later.
Precisely. And the sources don't just talk abstractly. They give concrete, industry-specific examples of this dynamic, how chasing short-term gains directly leads to accumulating long-term risk, what some people call technical debt.
Okay, let's get into those. Examples make it real. Where do they start? Tech sector.
Yeah, tech is a prime example, always chasing growth metrics, user numbers.
The move fast and break things mantra.
Kind of.
Yeah.
The source material points to big social media companies, app developers. Well, think about product updates being rushed out.
Okay.
Are they rushed because they're perfect? Because they're fully tested and secure? Often, no. They're rushed to hit a deadline to show user engagement growth for the next investor call.
And the consequences.
We see it all the time, right?
Yeah.
Privacy scandals erupting because safeguards were bypassed. Major security holes appearing because testing was cut short. Companies doing massive A/B tests on their live users instead of proper beta testing.
All because the market timing demands they launch something.
Exactly. And the long-term cost, it's huge. Lost user trust, massive regulatory fines, eventually having to go back and fix the mess, re-engineer the whole thing. It often dwarfs whatever brief gain they got from rushing.
That's the technical debt you mentioned. It's like taking out a high-interest loan on your product's quality.
That's a great way to put it. And this isn't just tech. Look at retail.
How does it manifest there?
Major chains, especially brick-and-mortar ones, they're under immense pressure from online competition. Margins are thin. So what gets cut first to make the quarterly numbers look better?
Staffing.
Training. Bingo. The sources talk about slashing staff training budgets, cutting customer service personnel, things that directly impact the customer experience.
Okay, so maybe profits look slightly better on paper for that quarter.
But you're systematically eroding your brand. You lose that institutional knowledge from experienced staff, customer loyalty tanks, because service is awful.
It's another long-term liability created purely for a short-term account gain, like you said earlier, eating the seed corn.
Precisely. And the sources also highlight a really critical area. Pharmaceuticals, public health.
How does short-termism play out there? The stakes seem incredibly high.
They are. The pressure drives companies to prioritize drugs that guarantee quick, high-volume returns. Often these are just minor tweaks on existing, profitable drugs, high-margin stuff. Instead of investing in the high-risk, potentially groundbreaking research into treatments for less common, or maybe less profitable, diseases. Yeah. Even if those treatments could be life-saving.
Wow. So the decision isn't primarily driven by medical need or scientific potential,
but by shareholder demands for consistent ROI, return on investment. It's a systemic issue, the sources argue. It's not just one bad actor. It's the environment itself that stifles innovation and can compromise integrity.
So if we pull back, look at the bigger picture. Who or what is really fueling this short-term frenzy?
Well, the sources point to the whole corporate ecosystem. Venture capital, for instance, plays a big role, especially with startups.
How so?
Startups rarely get the breathing room to patiently build something robust. The pressure is intense. Scale fast. Hit these metrics. Pivot to whatever's hot right now. Why?
To secure the next funding round.
Exactly. The goal often becomes less about building a truly sustainable company solving a real problem, and more about achieving a quick exit, getting acquired, or going public before, maybe, the shaky foundations or the accumulated technical debt becomes obvious.
So there's just no room, or maybe no courage, for those big strategic investments, the ones that are crucial for long-term survival but don't pay off immediately.
Very little room. Foundational research, building infrastructure that's maybe over-engineered but super reliable, those get sidelined, which brings up what you called strategic courage.
Yeah.
Especially in public companies. Imagine being a CEO. You face analysts grilling you every quarter, demanding consistent earnings growth.
Constant scrutiny.
Right. So what happens if that CEO says, okay, folks, we're going to miss our Q2 earnings target by 5% because we're pouring money into a research project that might pay off in 10 years?
The market punishes them instantly. Stock drops. Maybe activist investors get involved.
Possibly even lose their job. That inability, or maybe this is system-induced disincentive, to endure short-term pain for long-term gain is baked right in.
So the ultimate result, according to the source material.
A corporate world where quality often takes a back seat, where long-term vision gets completely blurred by the frantic need to please the market, quarter after quarter.
The time horizon shrinks to just the next 90 days.
Which, if you're trying to build something fundamental, something like reliable financial infrastructure, well, that's just catastrophic.
Okay, so that paints a pretty bleak picture of the standard operating procedure.
It does. And that's the backdrop against which BNB Frog positions its alternative, the eternal perspective.
Right, the divine alternative, as you called it. How exactly do they define this? How does it let them step outside that short-term model?
The core concept is liberation. They explicitly state the project is unburdened.
Unburdened by what, specifically? We know the constraints, but what's the mechanism of freedom here, according to them?
Unburdened by exactly those pressures we just detailed. So number one, no pressure to maximize shareholder value for external investors. They don't have them in the traditional sense.
Okay.
Number two, no crushing venture capital expectations, forcing unrealistic growth or development timelines.
Right.
And number three, the big one, no need to structure everything around hitting quarterly earnings targets.
Okay, but hold on. Let's apply some critical thought here. If they're not answering to the financial market, which for all its flaws is a form of external accountability, then who are they answering to? And what does that accountability look like in practice? Because without any oversight, isn't there a different kind of risk?
That's a fair question. According to the sources, they answer to that divine leadership structure we mentioned. God is chairman, Jesus is CEO. The values are purpose, resilience, lasting impact. Not fleeting financial gains.
So accountability isn't measured by dollars and cents on a quarterly report.
Apparently not. It's implied to be measured by adherence to a mandate of integrity, quality, and fulfilling the mission. The idea is that this internal compass, driven by the divine mandate, is actually stricter than external market pressure when it comes to long-term quality.
So the risk they're managing isn't disappointing shareholders, it's...
Compromising the mission itself. Failing to deliver on the promise of durable, trustworthy systems aligned with divine wisdom. That shift in authority is what supposedly unlocks the operational freedom.
But does the source material address things like external audits? For tech, for security, or is the claim that this internal integrity is sufficient?
The documents strongly imply that the mandate requires a level of internalized integrity that should, in theory, exceed typical external pressures. Because the goal is a durability in serving the mission, they argue they have to invest the time and resources in quality control.
Things a purely market-driven company might see as unnecessary costs.
Exactly. Things that get cut to boost short-term profit.
Okay, so freedom from the quarterly report is the philosophical core. But how does that translate into action? What specific, tangible freedoms does this perspective grant them on a day-to-day operational level?
It translates directly into where they put their focus and resources, primarily building robust, high-quality, maybe even over-engineered platforms and services.
So they have the freedom to just say no.
Yes. Freedom to say no to market fads that demand rushing out half-baked tech. Freedom to take the time needed. The larger mission this freedom serves is building financial systems people can fundamentally trust.
Because they weren't built under duress, scrambling to meet an arbitrary deadline.
Precisely. It implies a complete rethink of risk management and product development timelines.
If you're not sweating the Q3 numbers, you can actually afford to invest heavily in multi-layered security testing, right?
Right.
Or complex infrastructure builds, deep research.
Without that financial clock ticking down, dictating every move.
So their definition of success changes entirely.
Completely. It's divorced from just the financial metrics. The sources define success as durability and excellence. Building systems designed explicitly to stand the test of time.
That really is the ultimate operational luxury in today's world, isn't it?
It absolutely is. The freedom to be patient. That's maybe the rarest, most valuable commodity in modern business.
Okay, so let's connect this back to the problems we discussed earlier. How do the operational choices enabled by this rejection of short-termism directly contrast with those industry failures?
It creates a stark difference. Think about rushing versus reliability.
Right.
Organizations forced to cut corners, rush products, they accumulate that technical debt, those security risks we talked about. BNB Frog, according to this mandate, can take the necessary time. Sometimes that means taking a lot longer.
To ensure the foundation is solid, especially critical in crypto and DeFi where things are volatile, stakes are high.
Extremely high.
Yeah.
And this commitment to quality, it has direct implications for tackling that classic blockchain trilemma. You know, the trade-off between security, speed, and decentralization.
Ah, yes. How does the eternal perspective influence their approach there?
Well, think about it. A company driven by short-term market demands, needing fast adoption, high transaction speed, now what are they likely to sacrifice?
Usually decentralization or maybe security to get that speed.
Exactly. But BNB Frog, lacking that immediate pressure, can theoretically prioritize differently. They can choose the slower, perhaps more computationally expensive, but more robust consensus mechanisms. They can implement more rigorous, time-consuming security protocols.
Because their success metric isn't transactions per second today.
It's long-term stability and security. They're choosing durability over instantaneous market capture. That structural freedom lets them pick tech based on longevity, not just the quickest path to profit.
What specific infrastructure areas do the sources mention benefiting from this patient approach?
They highlight the core financial plumbing, secure wallets, payment systems that can actually scale, and reliable cross-chain solutions. These need the absolute highest standards.
Let's break those down. Secure wallets. What does prioritizing quality over cost imply there, in practical terms?
Well, it could mean moving beyond basic single-key setups. Maybe implementing mandatory multi-signature requirements for significant transactions, integrating really sophisticated cold storage solutions.
Things that add complexity and cost up front.
And time. Things a company rushing to market might deem gold plating and skip. But if your mandate is long-term security, these become non-negotiable. It also means seeing software not as a launch and forget thing, but a continuous cycle of auditing, updating, maintaining.
Okay, and scalable payment systems. What does that look like without the pressure for instant
It
results?
means designing the core systems, the ledger, how transactions are finalized not just for today's traffic, but anticipating the load maybe 10 years down the line.
Avoiding those scaling bottlenecks that often cripple successful platforms later on.
Right. It means investing in high quality, maybe even overspecified back-end architecture from day one. It's more expensive initially, slower to deploy, but it's built for resilience and future growth.
So this intense focus on security and scalability is a direct result of not having to chase fads or launch too early just to satisfy external demand.
That's the argument. They position themselves as setting a new benchmark, particularly for infrastructure that needs to outlast market cycles. Patience becomes a form of active risk mitigation.
And this frames the project as something bigger than just another crypto entity, doesn't it?
Yes, the sources definitely position it as a movement trying to redefine business norms. The ambition, creating inclusive financial systems, empowering communities. They argue this is only possible because they have the freedom to prioritize quality and resilience over quick wins.
They also mention specific virtues being necessary for this approach.
Yeah, faith, strength, and patience.
Okay.
And these aren't just presented as, like, nice ethical ideals. They're framed as operational requirements.
How?
Patience allows for that deep, careful infrastructure development. Strength gives them the conviction to stick to their high-quality plan, even when competitors might be grabbing headlines with faster, maybe less robust rollouts. And faith underpins the whole long-term vision.
So the argument is align with a higher enduring purpose, and you unlock the operational resilience needed to build something that truly lasts, which in turn serves the community better than short-term speculation.
That's the core thesis. It's an operational philosophy rooted in a theological mandate, designed for one ultimate freedom: the freedom to prioritize quality and durability above all else.
Okay, so thinking bigger picture now.
Yeah.
What are the broader implications? If this model works for them, what does it mean for other industries?
Well, the sources don't shy away from this. They position BNB Frog not just as a crypto project, but as a potential trailblazer for all industries, a kind of governance laboratory.
How? By challenging that core assumption.
Exactly. Challenging the conventional wisdom that short-term quarterly profits are the only valid measure of success. They're trying to offer empirical proof, perhaps, that strategic patience can lead to superior quality, which builds greater long-term value and trust.
Let's make that comparison sharper, maybe with traditional finance, which you mentioned earlier is often seen as the prime example of short-term thinking.
Right. Think about the operating mandate of many large banks or investment firms. What does the short-term focus push them towards?
High-frequency trading, complex derivatives, leverage.
Often, yes. Tools and strategies designed to generate significant returns fast, boosting those quarterly numbers. But these strategies can also increase systemic risk, reduce transparency, and sometimes, as we saw in 2008, contribute to broader economic instability.
So leveraging complexity for immediate gain, sometimes without fully grasping or caring about the long-term or societal risk.
That's a criticism often leveled. BNB Frog, by contrast, claims to be building an ecosystem explicitly grounded in integrity and long-term vision. The implication is stability, transparency, predictability, actively designing against the kind of speculative risk fueled by short-term mandates.
A system built under their eternal perspective would, by definition, have to reject purely speculative, zero-sum activities.
That seems to be the logical extension of their mandate, yes, because those activities serve only fleeting financial gain and potentially compromise long-term stability.
And the manufacturing parallel they draw,
It highlights the same contrast. Companies outsourcing production purely to cut immediate costs,
which it often leads to.
compromised quality control, damage to local economies where production used to be, and perhaps most critically, incredibly fragile supply chains. We saw that play out dramatically recently, didn't we? Prioritizing the lowest immediate cost led to massive disruptions later.
Whereas the eternal perspective implies prioritizing things like quality, integrity in the process, maybe localized production for resilience, even if it costs more up front.
Precisely. It inverts the usual equation. Cost isn't just a price tag. It's viewed through the lens of long-term durability and reliability.
So pulling this all together, what's the message for other industries that are maybe struggling with the consequences of short-termism, eroded trust, falling quality, missed opportunities?
The message seems to be, look, here's a conceptual path forward. BNB Frog aims to demonstrate that breaking free from the quarterly earnings hamster wheel allows for strategic resilience and ultimately higher quality.
It's almost a call to action, isn't it? Saying that real greatness defined by stability and quality, not just rapid growth, is possible if you embrace a longer vision.
And the ultimate aim, as they put it, is proving that wealth in the right hands, guided by divine direction, can change the world for the better, which also serves as a potent critique. If your current corporate structure prevents you from building with integrity and durability.
Then maybe the structure itself is the problem, not just your execution.
Exactly. It's an operational philosophy demanding the freedom to pursue quality above all else, ensuring you build to last.
Well, this has certainly been a deep dive into a very unconventional approach, the eternal perspective. We've walked through the critique of short-termism, the unique liberation claim through this faith-based mandate.
And importantly, how that freedom translates into a practical focus on quality and resilience, especially in building critical financial infrastructure like wallets, payment systems, things that need to be incredibly reliable.
It definitely forces you to reconsider what success even means in business. And that leads to a pretty provocative final thought, building on what the sources suggest.
Which is?
If organizational success is truly about resilience, enduring quality, lasting impact, the very goals of this eternal perspective, then, well, it raises a chilling question, doesn't it?
Go on.
How many modern companies, especially publicly traded ones, totally beholden to those quarterly cycles, are actually building systems designed almost inherently to fail in the long run because the short-term pressures force compromises that undermine durability?
That's a powerful question. It points to a potential crisis of purpose baked into the current system. If the incentives reward cutting corners, sacrificing quality, pushing long-term innovation to the back burner, then maybe the foundation is inherently unstable.
So if we accept that this is a real issue, this structural disease, as you called it, what's the takeaway for organizations that aren't faith-driven? How could they possibly adopt this level of patience and long-term focus? What would it take?
That's the million-dollar question, isn't it? They'd need some kind of structural equivalent, some mechanism that provides a similar bulwark against short-term market demands.
Like what could that look like in a secular context?
Well, you'd have to institutionalize patience somehow, maybe through specific governance structures, things like dual-class shares that give founders or long-term stakeholders more voting power. Exactly. Imagine tying leadership bonuses, not to the quarterly stock price, but to 10-year or even 20-year performance targets based purely on quality metrics, system durability, customer trust, things like that.
That would certainly change incentives.
It would have to. That's the real challenge BNB Frog's mandate implicitly throws down to the rest of the business world. How do you build patience into a system fundamentally wired for urgency? Answering that, well, that's the homework for anyone serious about building something that truly lasts.